Advanced Innergy, AIH, shares really plummeting today. The company cutting its FY26 financial guidance. So it's a protection equipment manufacturer, and it now forecasts revenue of £162 million, down 14% from £188 million. So underlying earnings expected to reach $20 million, down 34% from previous guidance. Advanced Innergy says the downgrade reflects disruption from the Middle East conflict, consumer project delays, and elevated costs for manufacturing inputs on fixed price contracts. What do you make of this coming through, Luke? Because you would think that it's in the right space, right time for all the defense spending, no?
Yeah, well, I mean, everything I said in the intro, Nadine, about some of these smaller companies shrugging off the impacts of the macroeconomic factors, throw that out the window, because Advanced Energy's come out today and said the Middle East conflict has really hit them hard. They play in a few areas, somewhat in that defense space, but a big chunk of their revenue comes from oil companies and that sort of subsea exploration. They compete with a fellow ASX-listed company, Matrix Composites, who they've actually just acquired. So I think the market was potentially interested in this business because of the bringing those two businesses together. Both of them not subscale, but the ability to put two businesses together in the same space and really drive some of those efficiencies. But nonetheless, as they call out the impacts of the Middle East, the oil price, I know it's higher, which theoretically benefits them, but I think more importantly, the volatility just stops that decision making, stops those long-term capex plans from going ahead when it's the volatility of the price, whipsawing around on Trump tweets and any sort of developments in that Middle East conflict. It's another one, though. It's a very recent float. I think it was October last year. And I know the Team Invest guys, when they come on the call, like to talk about giving a company, I think, 3 to 5 years of listed operating history. And this is sort of the reason why. And look, I do sort of grant Advanced Energy the fact that most of this does sound like it's external factors that's weighing on them. But, this is why investors do like to take a back seat. Give a company a few years in the listed environment. How do you handle giving guidance? How do you handle investor relations? Because, a few years ago, if something like this happens to Advanced Energy, it's a private company, business is weak for a period or two and then things bounce back. Now you're managing an investor base. Now you're managing a public share price that's down 30-something% today. And it's a very different ballgame. And that's why a lot of people, will wait to see what it looks like. And it would probably be my advice here, Nadine. I think this is one. Let some water go under the bridge here. I know when you have these big down days, people, some people naturally inclined to try and try and grab value or get something that's really beaten down. But I think we can wait a few months here, wait for the full year report, wait for things to sort of improve. Given that I think, I'm giving shout outs here today, but I think Nathan also comes on the call and says these sorts of IPOs, when they underperform in that first year, tend to underperform for a few more because those IPO holders, a bit disgruntled and look, just will get out over time. So I think this is one just to sit on the sidelines for a while. Interesting company, potentially looks cheap, but I just think the dynamics of the share price and the structure where we are today, it'll be a while before it recovers.
Yeah, right. Name dropping, but I love that you are obviously an engaged viewer as well as one of our experts, Luke. Okay, so would you be buying this on value?
I think like a company can IPO and disappoint and then recover. Like Collins Foods, a great example, but. And this does definitely seem like a good company, like it's a serious company. They have serious sales and they look the goods, but it's just that like they sold on the expectation that they would deliver 60 million equivalent EBITDA, and now 60 Australian EBITDA. Now it's like 40, and people bought at $1, and now I'm just thinking it's just like. That kind of disappointment is going to take a while to recover from, and they do very specialised work, but they're operating in the cyclical industry, so there's limited growth, if you can call it that. But it's a good company, and it does have a price, but I just wouldn't be stepping in. I wouldn't be stepping in. If you own it, just hold on. It's like CSL when you own Sisal, I think just hold on, because the management's got their backs against the wall and they're going to be doing everything that they can to improve the situation. But if I was from the sidelines, I wouldn't
Okay.
be jumping in.
Thanks, guys. That's Advanced Energy.